This podcast is brought to you by Ginsler Wealth. The information discussed today is meant to be general in nature and not tailored to your specific investing circumstances. This means that you should talk to your regular Ginsler Wealth advisor or your own advisor before acting on any information we discuss today. Nothing in this podcast is intended to be a solicitation, and past performance does not guarantee future returns. This episode is in our series of Lessons with Leaders, so get your notebooks out. Today on the Unlimited podcast, we speak with David Kassie, Chairman of Outcome Asset Management and Chairman Emeritus of Canaccord Genuity. We talk about his investment banking career, leading strong performers, and big deals and his biggest lessons. Let's go! Well, welcome everybody to another episode of the Unlimited podcast. Today, this probably falls into the category or the series that I call our Lessons with Legends. We have today David Kassie, Chairman of Outcome Asset Management and Chairman Emeritus of Canaccord Genuity. He is well known in the Canadian business circles, and what we're going to do is cover, I hope, his backstory, his move into banking at Wood Gundy, and ultimately, I guess, CIBC, what life was like as a banker in the 80s, 90s, 2000s, and we'll also cover his exit from CIBC with the launch of Genuity. I was there at the time. It was a big day, big shock at CIBC, and the evolution of Genuity to Canaccord and to his current role, as I said, as Chairman of Outcome. So, David, thanks so much for joining.
My pleasure. Good to be here, Brian.
I'll give the sort of not super long, but not super short, quick, formal introduction of you. But then, as we always do, we'd love to hear sort of you tell the story of your evolution. So again, for our listeners, David is Chairman of Outcome Asset Management and Chairman Emeritus of Canaccord Genuity as of August 2024. He was Chairman or Executive Chairman of Canaccord Genuity since May 2010 and was Chairman and CEO from April to October 2015. David was Principal, Chairman, and CEO of Genuity Capital Markets from November 2004 to May 2010, at which time Genuity was acquired by Canaccord Financial. He is the former Chairman and Chief Executive Officer of CIBC World Markets and the Vice Chairman of CIBC, where he was there at, I guess, Wood Gundy and CIBC from 1979 to 2004. He has extensive experience as an advisor, underwriter, and principal. He sits on a number of corporate boards, is actively involved in community and charitable organizations, and is a director and former chairman of Baycrest Health Sciences, and was formerly on the boards of the Toronto International Film Festival Group, the Hospital for Sick Children, and Ivey School of Business. He holds a BCom with honors in economics from McGill University and an MBA from the University of Western Ontario. So again, welcome. There's, as I read the bio, you've been a chairman and CEO for many places and many years. So obviously very senior, very experienced, and really looking forward to hearing the story.
Okay. Well, maybe I'll start, Brian, with a brief executive summary. I mean, you gave the titles, but just in terms of my journey, and then talk about what I'm up to right now. And then we can circle back to anything of particular interest. So as you mentioned, I left what today is Ivey Business School with an MBA in 79. And really my career has been in 6 acts, if you will. The first act was an investment banker from 79 to 88, 89 at Wood Gundy. You know, in those days, we were generalists. We did everything, every type of product, every type of industry. And it was really a very heady time before anybody knew what an investment banker was. That was kind of my formative years, heavy on learning. In the 87, 88 timeframe, the Canadian banks, if people aren't familiar, were allowed to buy the investment dealers, which were all partnerships at the time, owned by individuals. And in Wood Gundy's case, CIBC bought Wood Gundy. I had decided as and after that happened that I didn't want to be an investment banker any longer. I wanted to be a principal And they didn't do that. And I was actually going to leave, but they suggested I do that there. So I started a merchant bank called CIBC Wood Gundy Capital. Wood Gundy actually still had a minority interest from the partners. So it was important that it was a joint venture, if you will. And I think I was one of, if not the first person to walk around with a real business card that had both the bank name and the investment dealer name in it, and doing something that covered both sides of what at the time was a very controversial cultural get-together, which was a commercial bank and an investment bank. This is back in the late 80s. I became chairman and CEO of what became CIBC Capital Partners, at the time CIBC Wood Gundy Capital. I did that for about 5 years, full time. And then I was asked to take over investment and corporate banking. And then shortly after taking that over, build it out into a global investment bank. So for the next 10 years, from 93, 94, I was head of initially investment, corporate, and merchant banking globally. And then ultimately, my last 5 years as chairman and CEO of CIBC World Markets. So the Act Two, if you will, was the merchant bank. Act Three was, basically a senior executive CEO, business builder. I was doing deals as well, but really building an organization. I spent the vast majority of my time outside Canada, particularly in the US, was, semi-stationed there for a good part of 10 years. And then in 04, succession occurred at CIBC. I had been the designated successor. About a year later, just to make the record clear, about a year later, started Genuity. So Genuity was a fluke. I can talk about it later as to how it happened. But that ended up being Act Four for me. It was a straight startup, no premises, no clients, no revenue, nothing. And there we were, hired about 100 people it started with 2 partners. And, it was interesting times, to say the least. We did that for 5 years, then sought to have some sort of monetization, ended up merging with Canaccord to be Canaccord Genuity. That became Act Five for me. I became full-time executive chair of that. Briefly, as you mentioned, stepped in to be chairman and CEO in 2015 when the CEO tragically died in doing a triathlon, did a succession, and then carried on as executive chair. So from 2010, April 2010 till this past August, I was essentially mainly full-time executive chair of Canaccord Genuity for various reasons, including not wanting to have a lifestyle where I traveled all the time. I stepped down in August, this past August, was asked to carry on as chairman emeritus. All that means is I go to board meetings, the odd strategy session if invited, and a handful of investment banking clients. But my full-time gig now is chairman of Outcome Asset Management, working with Noah Solomon and Beth Philp. If I get, which is Act Six for me, which is kind of late career, but I feel very energized by what we're up to. It's got best of class performance over the last 5 years in its equity income fund. It's an algorithmic strategy, albeit steeped in investment theory. And, it's small right now. We're about 250 million of assets under management. But, basically with me now joining Noah and Beth be doing this full time, I'm pretty confident we'll take this to at least several billion over the next 3 to 5 years, and then we'll go from there. It helps, of course, when you have the best investment performance, because that's very critical. And I'm very, very enthused about that because it, gives an opportunity to help primarily Canadians right now, with their wealth, giving best performance. There's a chart we have where the difference between a 10% return a year and an 8% return a year, which is 2%, on a $10 million investment is over $20 million. That's the difference, the magic of compounding. So it's a big deal. I think it's an area that's, notwithstanding how invested Canadians are, is not well understood, ironically. And I think if we can add value to, Canadians with their wealth for their retirement, that feels like a worthy objective. So that's where I am today.
Okay. Well, got lots and lots of questions, but let's just start for a second back from the current, just because you're on the topic anyways. Can you just dive into a little bit more about outcome? You said, an area or investment approach that some Canadians or many Canadians don't understand. Maybe just describe what's happening over there a little bit more, and why and or how the firm has generated the performance you've outlined.
Sure. Well, maybe I'll step back a bit because it kind of puts it into context. Noah Solomon was at Goldman Sachs for about 10 years when I met him in 2008. So it was still Genuity. And we had one principal business at the time. In addition to being an M&A investment bank with a little bit of capital markets, we had a $400 million private equity fund, given my background. And we had intended to get into the alternative asset management space, but I didn't see anything. I had many conversations with portfolio managers at brand name money managers who wanted to be owners, but they all kind of had a very similar approach that looked a lot like the index. And, the returns were okay, but they weren't great. And the approach certainly wasn't differentiated. And we didn't want to do anything unless it was really differentiated and excellent. Noah described, I met him by happenstance in New York in '08, early '08, and I was introduced to him, and he had described to me what he was doing, and it was kind of an aha moment. I loved it. Number one, the returns were really good over a long period of time. My experience back at CIBC World Markets, where we had lots of those types of strategies, as they were great until they blew up after 1 to 3 years. So his approach sustained. It had very low volatility, which I liked, very low drawdowns in terrible markets, meaning, it didn't go down nearly as much. And I really liked the fact that it was algorithmic. It was steeped in investment theory, but he had algorithms that, I guess in today's parlance, used AI. It went through 25, 30 years of data to develop the algorithms. So I really liked that. My experience with investment committees was that they weren't great decision makers. They were too emotional, too early, too late to what they read in the Wall Street Journal. So I liked the fact of an unemotional algorithm. Long story short, Noah joined to be 50-50 partners with Genuity in 2008. We gave him, notwithstanding it was obviously a very challenging time during the financial crisis, we gave him some partners capital to incubate the strategy. And a year later, it was the only strategy that I knew of that had made money in the prior 12 months. So we went out, we raised probably about 100 million very quickly, but then did, Genuity, it was the 5-year anniversary. We ended up doing a merger with Canaccord. I had told the 40 plus partners we would look at some sort of monetization. And it was a publicly traded investment bank. The two principal businesses were not included. As the largest shareholder at the time, I didn't think it made sense to have them included. They get no value there. So I carved out of my time to carry on for a small minority of my time to be given fiduciary obligations to be chairman of each of the private equity fund and Noah's business. The private equity fund we ran off over the next 5 to 7 years, selling all the underlying investments. In Noah's case, sort of very slowly marketing over time. He decided that he wanted to change the strategies after a few years to something, as he liked to say, for the next 20 years, not the last 20 years. And it's really about 7, 8 years ago that we did that. And the Canadian Equity Income Fund, as I mentioned, which is a very clever algorithm, pretty simple. It's basically, it's a little more sophisticated than this, but dividend yield divided by beta and 50 large cap dividend paying Canadian stocks that everybody know, every company in the portfolio. But the magic is that the algorithm weights them in a way that maximizes the benefit of dividend yields divided by beta, which is a proxy for volatility. And that has produced the best returns. And, most Canadians wouldn't know this, but 90% of managers underperform the index over the last 5 years, roughly 90%. This is one of the few that actually outperform the index, so adds value. And that's one of the reasons I'm just so enthused about this, because, and it's sustainable. We know exactly why. It does exactly what we expect it to. So very, very excited about that.
That's great. Okay, so that was what you ended your overview with. Maybe go back to the beginning. And I was in the investment banking business as well, but started much later than you. You joined Wood Gundy in 1979. Eventually, the banks could buy these private or principal-owned investment banks. But what was banking like in the 80s, 90s? I've always heard stories of wild things that you never know what's true or what's not true. But what was it like, becoming a leader in that area for that first act, I guess, of your career? What was life like then? And as always, feel free to compare to now, because times have changed for sure.
So I have to say that first 10 years was unbelievably exciting. I was like in my early to mid 20s when I started, and Wood Gundy had a dominant market share at the time. And you were working with CEOs and CFOs of every major company, taking companies public. And the big difference, just to compare it to today, and obviously the world has evolved, but you were a generalist then, pretty much. I worked on bond issues. I worked on equity issues. We didn't call it this, but I worked on securitizations. I worked on virtually every industry. Today, it would be highly specialized, sometimes within an industry, like a little piece of an industry. So I worked on tech, oil and gas, mining, forest products, consumer, insurance, banks, real estate. If I had a major, if you will, during that time, I worked on, which was very exciting because it kind of changed the whole capital markets. I worked on all the British privatizations that were undertaken by the Thatcher government. So I was commuting from around 84 to 89, not every week, but pretty frequently to the UK and occasionally to Europe, as Wood Gundy was almost on every one of them the lead advisor. British Telecom, British Airways, British Gas, British Petroleum, which was an interesting deal because it happened during the crash of '87. British water authorities, British electricity boards, etc. So it was a pretty heady time.
How did this Canadian investment bank become the lead advisor on all these British deals?
So the format that Her Majesty's government, HMG, that was your client, if you will, Her Majesty, felt a little bit like James Bond. The format was that they hired a UK advisor, the company or the industry being privatized, or the company being privatized hired an advisor. And then because they were so large, these offerings, and the UK market, the London market was pretty small by comparison, they hired a lead underwriter, advisor for each of the US, Canada, Europe, and Japan. So in each case, there were four, in addition to the UK, there were four separate lead advisor underwriters for those markets. Okay. Ironically, of course, the US, being the way they were, tried to talk Her Majesty's government to letting them handle Canada. But
the 51st state, you mean?
Exactly. But the British obviously were very sensitive to that notion, and told them to hit the road. And that's why Canada, which hit way above its weight for the TSX at the time, and in terms of distribution. But obviously Canada was a relatively small country compared to those other markets. But as I said, we more than held our own. So that's the reason why Canada and Wood Gundy was the lead advisor for all these offerings.
Okay, got it. Through that, and then I guess CIBC acquired Wood Gundy, and as you said in Act maybe 3, I can't. Lots of acts. Hopefully, I get them right. You took a real leadership role, obviously leadership management. Like what was the challenges or the some of the interesting parts of that role of becoming sort of a leader of a much, I assume, was a much larger organization, obviously clearly doing an amazing job because your leadership roles kept progressing.
Right.
How do you shift from banker to leader, and any interesting challenges or lessons from doing that?
Yeah.
Hard to lead bankers in my experience. Not that I was a leader of bankers, but I was a banker and saw the
Right.
personalities.
Well, you're absolutely right. So very insightful observation. So Act 2, which is I started a merchant bank, but which, we were only about, I don't know, I'm going to say 15 people, and we grew it to about 40 people over time in the US, UK, and Canada initially. That by comparison was relatively easy management wise because it was relatively few people. In terms of the transition, ironically, I remember, to your point, I had not been a manager. I'd been a leader of a team, if you will, in investment banking, but not building a business. And I guess my observation would be, having been an investment banker for 10 years at Wood Gundy, which was as good as it got at the time, there was very little management at Wood Gundy. It was a partnership. Everybody did deals. It was client oriented. So it was a wonderful culture that way, but you needed to be a self-starter and not really care about getting a pat on the back or et cetera. So I had never had a performance review or anything like it. By the time I finished that stint, I kind of thought that there should be, not for me, but just generally. So I remember going overboard when I started the merchant bank, doing these 360 performance reviews where I literally would talk to 10 to 20 people in a person's orbit, below, beside, and above them, and give them, a very detailed performance review, strengths, weaknesses, areas for improvement, very constructive. People were initially really cowed by that because nobody had ever done that. But I remember one fellow who was a very talented guy, ended up leading the group eventually, said to me, he came in one morning, he said, I didn't sleep last night. He said, you gave me my review, and he said, nobody's ever talked to me like that. I was a little taken aback, but you know what? I really thank you. I took it to heart, and he really upped his career. He was very talented, but he was kind of coasting in his own words. He said, I just do what I have to do. And all of a sudden he got really motivated and et cetera. So, so they actually worked. So that was a very different. It was a little bit of a laboratory for me. Obviously, 95% of my time was doing deals and what today would be called private equity, private credit, bridge loans, hedge fund-like strategies. So it was kind of an all-purpose merchant bank that we grew from initial capital of 50 million to, at its peak, 5 billion, almost 10, 15 years later. But the real challenge management-wise was when I was asked to take over investment and corporate banking in 93, 94. I decided, and CIBC at the time, in part because so many of the Wood Gundy senior partners had checked out after the takeover, had fallen from first or second place to last place. So it was basically a rebuild, in addition to building it out in other areas of the world, particularly the US. And it was, I have to say, it was exhausting because I came up with a strategy that I thought would differentiate us and take advantage of the merits of the commercial bank, the corporate bank, and the investment bank, albeit they had two completely different cultures. And that was really challenging to bring those cultures together with both sides. And it was like fighting an election it felt like fighting an election campaign every day. But I have to say, it took a few years. So it's not something that goes fast. But from 93, 94, I would say 96, 97 in particular, it was really working. And none of the other banks had done it. So yeah, it was a differentiated strategy and a very powerful one. And it vaulted us back into first place. But the real lessons were, boy, it's hard to, deal with people and cultures. And, you really have to be hands-on and deal with each individual, on a personal basis, et cetera. So
Yeah.
very challenging.
Well, I remember, so I was in investment banking after undergrad. I went back, did grad school, came back. I was at National Bank. I started at First Marathon. Obviously, they got acquired, but I was at National Bank and got a call from the leader of the financial institutions group at CIBC at the time, asking me would I want to come over. And to be honest, I wasn't sure if I was going to do investment banking the rest of my life, but the key decision for leaving National to come to CIBC was that CIBC was number one. They were the top. And so I figured, well, I don't know if I'm going to do this the rest of my life, but why not do it at the top firm and see how things, see how it goes. And CIBC was great. Ultimately, I decided, as I sit here today, to move to the wealth management, investment management world. So I guess in some way, your leadership that got you to number one was something that got me interested in CIBC way back when. And then speaking about that, so I joined CIBC in 2004, I guess, and then very shortly after, a whole bunch of people disappeared one day from CIBC, and they went to Genuity. Maybe you could talk a little bit about, you launched Genuity with some partners, and a whole host of people came with you. So how did you get folks to follow the leader there and take the big plunge from what was probably a pretty secure, stable thing at CIBC? I remember it was a big shock that day when, a whole bunch of people literally just on the same day basically disappeared.
Right. So I left in, just so everybody gets the chronology. I left in early February 04.
Yeah.
Genuity was a fluke. I was, to be fair, it was separately after me, and they didn't report directly to me. They were, I think, co-heads of investment and banking or Canadian origination. I can't remember what it was called, but Phil Evershed and Dan Davio, each with their own particular circumstances and at different times left in the ensuing 6 months, and they had worked obviously closely together as co-heads. They approached me in, I'm going to say around June, of whether they wanted to start a new investment bank, whether I'd be their partner and do that. I have to admit that at that point, first of all, I was going to take a year off, and I had already taken 4 or 5 months off. I hadn't had any time off since college. I was probably going to move to New York, was my thinking, and I was going to be in private equity, either a named partner in my own fund or a partner at, a brand name fund. So that's probably what I was going to do until they approached me. Yeah, we worked, I remember sitting in my garden, having a conversation about, so what are your aspirations? What would this look like? Can we come up with a business plan where this would be meaningful enough, et cetera, et cetera. I was traveling much of that summer, so we kind of worked on a business plan intermittently, came back in the fall and said, okay, this is really interesting. The reason the reason why it happened, what you described, is, we decided to go ahead. I went and you had to apply for an IDA license. I remember calling Joe Oliver, who our former Minister of Finance. He was the head of the IDA at the time. I think it was called the IDA. They've changed their name so many times. And I said, Joe, I'd like to file for a new firm and get a license. I said, is this a confidential process? We don't want anybody to know about it. We don't want to start talking to people for another 4 or 5 months, call it in the new year. And he said, it's absolutely confidential, David. I said, okay, great. I send in the application. the day after it's a headline in the newspaper.
And how did that happen?
Well, apparently, so I called up, needless to say, I called up Joe and I said, Joe, like you told me it's confidential. He said, well, it is. But I said, well, what's the process? He says, well, we send it out confidentially to every investment dealer, because that's a notification. I said, that's like skywriting.
Right.
There's no bigger gossips than, investment bankers in our industry. Anyways, so all of a sudden, I'm going to say this was September, we're getting calls and emails from everybody. I'd already gotten some from people saying, what are you up to? If you do something, I'd be interested, et cetera, et cetera. But we started getting just a flood of calls. So, we must have interviewed, and we wouldn't talk to anybody. I should say this: we wouldn't talk to anybody, whether it was at CIBC or any place else, without them signing a "you approached us."
Right.
I having run one of the biggest platform. Yeah, I didn't want to be accused of poaching anyone, etc. So they literally, to see a business plan, they had to say, I approached you, which was true. Like we didn't reach out to anyone directly. So, we probably interviewed, I don't know, 200 people plus over, I had to put an addition on my house. So the joke was my office was over our garage. So the joke was Genuity started over my garage. So we interviewed a lot of people. We started day one with about 100 people in, December, January. And, of which, frankly, only about 20 were from CIBC World Markets out of the 100. Notwithstanding the headlines, it wasn't exactly a CIBC World Markets firm. But anyways, obviously, the lawsuit came from CIBC because I think they were really concerned about how many people were going to leave, and they thought that would have an impact on people not leaving. That's what happened. And so we started the beginning of '05 effectively. And, it was that first 5 years was pretty interesting, I can tell you, because, I not only did I interview a lot of people, I interviewed a lot of people's spouses, because people were leaving jobs where either they were guaranteed or effectively guaranteed. You kind of knew what you're making. So, you could be making, let's say $1 million, at one of the investment banks with bonus. Your salary might be 150, but, on average, you had an 850 bonus. In a bad year, you made 600. In a good year, you made $1.25 million or something like that. But that's the type of people, you can move the fulcrum there a little bit depending on the area, but that's the type of people. And all of a sudden, they were coming to a place where they were going to get a 150 draw. No guarantee, we had no revenue. We couldn't tell them they were going to get a bonus.
Yeah.
And they had to write a check for the equity.
Right.
That's, that's a leap of faith. Notwithstanding, it was treated as if it was, we have lured people away with, pots of gold or something. No, and the money, we had no outside investors. The money was, the senior partners initially. I mentioned Phil, Dan, and myself, and others joined. From various areas, and and everybody wrote a check. Basically, we at the end of the day, we had over 40 partners.
Amazing. And so I want to ask you a little bit about the entrepreneurial side of that. But I mean, sounds like for that process and through your career, you've interviewed, you've hired hundreds and hundreds of people. What are the traits of the people that you've hired over time that have proven to be, the best measure of success or the best foretelling of success? And what sort of interviews do you have where you say, this is not going to work? Like, not like for us.
Yeah. So, I mean, if I go back over all the acts, if you will, they're all different environments.
Right.
So if there's a theme of, and I made my share of mistakes, no one actually big one that still bothers me, but, I think I've been good at it, but I would say the number one feature of successful hiring is fit. Fit being the skill set, the psychological mindset, the objectives, the aspirations of the individual joining to the environment.
How do you
So,
figure that out in the interview, though? Because aren't people going to tell you, hopefully, presumably, exactly what you want to hear
well,
if they're smart?
well, first of all, their background. So it's not about being smart. That it's clear how smart they are or not smart they. But fit isn't about that so much. It's about do their skill set and objectives match the environment. So, for instance, getting somebody who is really good at CIBC World Markets with the power of a loan book, as a draw to clients and I tried to make it as an entrepreneurial environment as I could, but it was still a large organization with controls everywhere as it should be versus Genuity where you had nothing. Basically you lived by your wits. You had no natural advantages except your ideas and abilities to convince a client to trust you, not the firm, you.
Right.
Whereas when you have a brand in an organization and a huge toolkit of different capabilities, and the same person who's really good at Genuity might not be good at CIBC World Markets and vice versa.
Right.
In fact, that's one of the things we knew at Genuity. There were a couple of mistakes we made where the person, was really good in a bank environment where they weren't, it's not that they weren't good. It's just that they weren't happy. In one case, I remember the fellow, he was so nervous because he didn't feel secure. And I'm pretty sure he was hearing it at home and
Yeah.
because he didn't know exactly what he was going to make, etc. It was a bad fit psychologically. There's nothing wrong with their skill set and the type of person they were. It was just a bad fit.
Right. Okay, got it. Just as we wrap up a little bit on the banking career, acts 1, 2, 3, 4, maybe just for fun, any sort of big, major, exciting, transformative deals that you worked on that you think have an interesting story, good story, bad story, funny? I think you had mentioned to me you took Four Seasons public. You've met with government leaders. You don't have to talk about those if those aren't the exciting ones, but that stuff's exciting to me.
Well, there's quite a few, as you can imagine. Yeah, probably the one that we were at CIBC World Markets anyway. That was best known for was Global Crossing. Where Global Crossing was a fiber optic cable project of laying fiber optic cable across the Atlantic Ocean. And it was an $800 million infrastructure play. And it was the first non-telephone company consortium-led fiber optic cable project where we were going to have outside investors. And the telephone companies would only be customers, not owners. We went and raised 800 million greenfield project finance. Now we happen to have, as an organization, a huge amount of expertise because we had lent money and advised on the previous two projects, one called Flag Fiber Optic Link Around the Globe, et cetera, which were telephone consortium owned. Long story short, as part of the 800 million, there was I'm doing this from memory, about $100 million equity account. A lot of it was, debt, high yield, senior pref, et cetera, but $100 million equity account, of which we took $30 million in our merchant bank. That 30 million turned out to be worth 2 billion. And the reason why, so it's the stuff that you dream of. In addition to all the fees that the organization made from underwriting debt and taking it public and the high yield and the M&A advisory and et cetera, and the reason why is because it was we financed and built it in the late 90s. And it was just when the internet boom was taking off.
Right.
And previously, the vast majority of what was transmitted was voice. All of a sudden, data took off. Think of the BlackBerry in everybody's hand and,
Yeah.
what happened with data. And Atlantic crossing became Pacific crossing, became global crossing as we built out and all of a sudden we had this giant company where data had just taken off. And I can't remember, but I'm going to say at its peak, this $800 million, it was about I don't know, 50 billion market cap, which was a lot in those days, like really huge in the
Yeah.
public markets. Eventually the internet bust and et cetera, et cetera. But we managed to make a gain of approximately $2 billion. So
That's
that
a
was
good
something.
one. That's a
Yeah,
good one.
that was
So,
something.
so that's what I call a big deal. Let me talk about small deals maybe, because I know that now you're a pretty active angel investor, or maybe you have been for quite a long time. Maybe talk a little bit about that. How do you find opportunities? Everyone wants to find these early stage companies that hopefully will be big winners. What are you doing on the angel investing side? How do you find them? How do you vet them? Because, pretty risky. Yeah. How's that going?
Because of my background at the merchant bank, we did some, earlier stage stuff. Probably the one startup that comes to mind, just because it was probably the first angel investment, albeit it was on behalf of the bank, was Sleep Country Canada.
Mm,
Sleep
yeah.
Country was started by an old friend of mine, Steve Gunn, and others. And I think the initial capitalization was 2.5 million, and we wrote, I can't remember, about 20% check on that. And I remember going to get it approved in investment committee, and I couldn't get it approved because we didn't do startups.
Right.
So I ended up, I had an operating budget, so I expensed it. And and it ended up being sold, I'm going to say, for about 200 million to Bain Capital, and then came back public as an income trust for 400 million. So, we did very well in it. And I always remember, because it was an infinite IRR, because I had to write off the investment as an operating expense. So that I had that as my background. So I started doing it after I left CIBC, because everything I had done prior was obviously for the bank. So I did quite a bit. I have to say I'm not doing much now. I'm busy with outcome, and I've done. I'm at a stage where I'm not looking for more. I'm harvesting what I have. But to your question, yeah, I think it's a really difficult area to be consistently successful at. And you're really going to have, it's like VC, you're going to have 8 losers and 2 winners, and you better hope that your winners play for the losers. Unfortunately, or fortunately for me, the first investment I made was a huge winner. So I thought it was easy.
Right.
I'm trying to remember what I invested. I think yeah, it was a, 20 bagger. So I thought, boy, this is easy. And, a
Right.
few other early ones were 5 baggers. And then all of a sudden you take your eye off the ball because you're busy building Genuity, or you're building Canaccord Genuity, because, which we spent, I've spent 15 years with the 2 CEOs, including my own small short stint. So you're very busy. It's difficult, is
Yeah.
what I'd say.
Amazing. So just the last maybe few topics before we have to go here. I don't know, how much you want to dive into this, but let's call it the state of Canada and the state of the world. Right now, we're talking. We really don't have an operating government. Trump continues to threaten tariffs on Canadian goods. There's unrest in the streets worldwide. Any thoughts on what's happening today, and maybe more specifically, what's your advice to whoever is leading this country? I'm not sure who's leading it right now, but any advice to whoever is or will be leading this country from your vantage point?
Yeah, I mean, advice. I think, I got to be careful here. Uh, I wouldn't be too reactive and cowed by what comes out of Trump's mouth. He throws a lot of stuff at the wall, regardless of what you think about him or whatever. That's what you're dealing with. So you got to understand that. I think you stick to your own principles. I think it's really important to have a plan B. Yeah, look, on in one paradigm, he's all about winning the press conference. So you throw people at the border, etc. You have to remember the NAFTA, according to him, was the worst trade agreement in history. Notwithstanding, when you actually analyzed it, the U.S. had done exceptionally well, as had Canada and Mexico. He renegotiated it, or had his minions renegotiate it. I would say, never mind, I would say the Wall Street Journal said, 1% or less of NAFTA substantively was changed, and now it became the best trade agreement in history.
Right, right.
So history repeats itself. Now we find ourselves where it's the worst trade agreement in history, notwithstanding he negotiated it. And we take advantage. It's just rhetoric, and you got to take it with not even a grain of salt, a salt mine. But having said that, he's got a lot of people around him, who have that type of viewpoint about trade. So not about Canada per se, just about trade. If that comes to be, I think we really need a plan B, where, it's a real sea change. I give the likelihood of a plan B a low probability, or the necessity of it, but I would have one.
What does that look like? What's plan B?
Well, somebody pointed out the other day, I think it was Europe, somebody in Europe, maybe it was Macron or somebody, I can't remember, I read, there are 7.5 billion other people not in the United States. Maybe we should have free trade agreements with the rest of the world, if he's not interested.
Right.
You look at Canada, we have a lot to offer. Now, what it requires is intelligent industrial policy, which, to be fair, I'm not sure we've had much of. There's not a lot of people in our government, at least in elected government, with backgrounds in that. That's not why they run. They didn't run to make Canada an economic powerhouse. Many of them ran because of other issues. So, I think it would be really important to get, when you see what some of the European countries have done, Switzerland, the Scandinavian, they really get together and figure out what's best for the country. Yes, they disagree over certain social issues, but at least in terms of industrial policy, if I can use that term, they figure out, what works for the country. We've never done that. I'll just take one example. LNG, which is to me like the biggest no-brainer in history. And we never, we didn't take advantage of an industrial policy to say, look where the world's going. We can be a powerhouse in LNG, but it means we need pipelines, and we need facilities, and we need them on different coasts and areas. And, we can deal with just about anybody and provide that, but we never did it. And, to me, that's what we need to correct as an industrial policy, almost regardless of whether, the U.S., stops with the Canada's our enemy nonsense.
Right. Okay, good. Appreciate that. Maybe a last formal question here. With all your experience, everything we've talked about over the last little bit just now, what would be sort of the number one piece of advice you'd give to, whether it's young folks starting a career in finance, or whether it's, someone in the middle of their career, best piece of advice, how to be successful in maybe career, maybe life, maybe they go together, and maybe the flip side being anything you wish you had known earlier in your career that would have helped propel you forward?
Well, I give the same advice that I give my two daughters, who, are doing very well in their careers. I find something that you love and are passionate about. Life, you only got one life.
Right.
Why not live it at least on the career part of it, doing something you really like. And if you don't like it, it's not worth it. And it's a lot easier to be really good or excellent at something that you love
Yeah.
than something you don't, that you're indifferent towards or, you're ambivalent about. So I think that's really important. I think self-knowledge is really important. I remember having one conversation with a fellow, this is way back. Well, I guess it would have been early CIBC World Markets, somebody who'd been an investment banker, and I was meeting with everybody and saying, where do you see yourself? What's your career aspirations, et cetera, et cetera. And this one fellow, he told me what his career aspirations. And I remember, the bubble in my head was, you got to be kidding. You're terrible at that. And so he had no self-knowledge. Now, I ended up asking him to take on, he did have a lot of good strengths though. But it was about fit. So I ended up, asking him to take responsibility in areas that I thought he was really good at, notwithstanding that wasn't what he envisioned himself. Yeah, and he ended up having an unbelievable career and having very senior positions in the Canadian financial institutions industry. But, if he had just done what he wanted to do, he wouldn't have succeeded because he didn't have the skill set.
Okay, great. Okay, last question. Maybe put you on the spot for a second. We ask everybody that comes on the podcast. Our theme over here is unlimited, your wealth unlimited. And we always like to ask, just to get to know the person a little bit better, if the world's unlimited, you could do anything you want, you could have done anything you wanted, you can still do anything you want. If you weren't, chairman of, CIBC, Genuity, Outcome, etc., if you could do anything you want or could have, what would you be doing, or what would have you been doing?
That's a good question. You know what? I guess my philosophy, and maybe it's about keeping yourself happy, is not to second guess. I've had a really good career. Can I say that's the only thing that would have made me happy? No. But I've really enjoyed it. It's been terrific. I mean, the only area, and unfortunately I'm 6'2", probably 6'1" now as I'm shrinking. I played college basketball. In my dream, I would have liked to have been bigger and played in the NBA and then maybe had a career doing that. But having said that, I had no aspirations to be involved in professional sports. You get to, in my point of life, social impact investing has been very important to me. That's been a theme of a big theme of my angel investing, of actually giving back and, hopefully making money at it as well, but doing something that makes the world a better place. I love basketball or pro sports or some pro sports, but I don't think that's social impact investing. I think that's entertainment. So no, I wouldn't want to have my career only doing that. But as an individual performer, if you will, I would have loved to, there's no greater thrill than hitting the winning three or, whatever, back in the day. So that was always quite thrilling.
Amazing. Well, it sounds like you've hit a lot of winning threes in your career and you've won a bunch of championships as well. So look, thank you so much for your time. Really appreciate it. Great conversation. And wish you all the best. And thanks again.
Okay. Thanks for having me, Brian.
Okay. Bye-bye.
Bye now.
The Unlimited podcast is hosted and produced by Brian Ginsler and is edited and mixed by myself, David McMillan. This podcast is not to be taken as investment advice. If you like what you heard, don't forget to rate the podcast and follow us on social media @Ginsler Wealth. Thanks for listening and see you next time.